Welcome back. This is Si-Win Yi from the Yi Real Estate Network. So I'm going to show you a winning formula, real estate investing in an upside down world. So without further ado, let's go through this process. This will be a very, very quick presentation, less than 10 minutes, hopefully. Let's see. All right, here it is. This type of property is a winning formula, and you have to look at the numbers. Real estate investors can do very well. So this is this week's inventory, and I'm going to show you just one property. And every week I will update you on a new video showing different cash flow analysis. I'm not even going to discuss the location because real estate investing is local and is no such thing as a national real estate market. So as an investor, if you're able to find a good local market, do your research, do your due diligence, and team up yourself with a very reputable company that can help you to invest, to buy rental properties under your name or in the name of your self-directed IRA for that matter. So anyway, this is out-of-state investing, passive remote investing. The great winning formula has been doing this kind of a concept has been done successfully over many, many years, over past 20 years, as far as I'm concerned. All right, let's go over this property. This property is a single family home. The market value is $52,500. Yes, I did not stutter. $52,500. You put single family home, you put 20% down payment, your out of pocket is $13,125. By the way, this is just a projection. This is just what we call a pro forma or a cash flow, monthly cash flow analysis. So anyway, so including the closing costs, this property total out of your pocket is measly $17,125. By the way, $52,500. Imagine you can buy either you can buy a car, perhaps a luxury car, perhaps a Tesla. However, you have to bear in mind a consumer debt, a fund material consumption like a car depreciate in value. There's no income associated with that. Why potential buy a vehicle for $52,000 when you can buy an income-producing real estate asset that will give you multiple benefits, which I will cover in a few minutes. So anyway, just 17 grand out of your pocket, and then typically the tenant, the renter, will pay you $600 per month, minus 5% vacancy factor, which is all here. I have incorporated 2% vacancy factor actually, because this is a very good rental market. And 10% property management fee, 7% maintenance percentage against the rent. So I have covered all the any potential issues that can pop up over the course of this long-term investment methodology. All right, so calculate the monthly debt expenses. Your property taxes, $86, insurance, $35 monthly, property management fee, as you can see down here. And also, you can finance even at a very, very high interest rate. Investors are usually pay more than a owner-occupied buyer. So I put in a very conservative 30-year fixed rate mortgage of 7.75% at 25% down payment. So your mortgage payment, which is, where is it? Your monthly mortgage payment is right here, $282. So $282, your monthly mortgage payment, by the way, you're not paying this mortgage. Your tenant, not only your tenant can pay your mortgage for you, your tenant can pay all your monthly debt service, and then you still have something left over. Isn't that amazing? So $282 monthly mortgage, they are part of the monthly debt service, plus taxes, property taxes, insurance, property management fee, vacancy factor of 2% per year, and then maintenance percentage. There will be maintenance and upkeep associated with any investment. So at the end of the day, because your rent is 600, paid off all the tenant that is going to pay off all your debt service. At the end of the month, you still have a whopping $84 monthly positive cash flow. And I'm not going to cover these numerical metrics. That's some of you understand what it is. If you are savvy real estate investor, some of you are newbies. You have to search for my YouTube channel to calculate some of these very important formulas, the metrics that all real estate investors look for. Rent to value ratio 1.1%, very above the benchmark for successful cash flow strategy. Capitalization rate is 8.4%, very high. Cash on cash return 6%, very good. Total return on investment, which is annually, the first year especially, around 15%. I'll go over the multiple aspect of the investment of this property momentarily, but bear in mind this is just your first year projection, still positive cash flow, and that's a winning formula. All right, so yep, even with a high mortgage rate for investor, you can still cash flow. Is that amazing? So, all right, so let's proceed to the next slide here. And the next slide is, here are the highlights. So as a risk investor, if you can put down a mere 17 grand or slightly more per property, you need to finance. You can scale your portfolio over time, it's not a quick rich scheme. It's a long-term buy and hold strategy. So you scale your portfolio based on your financial resources. You can buy one at a time or two at a time, whatever, if you can qualify. So these rental properties are appraised properly. They are all off market. They are not in a multiple listing service. They are turnkey rental properties, all rehabbed, third-party inspection will be done, and this house comes out very well during the inspection report, which you as an investor buyer will pay for a few $100s for it. Property management in place, they charge 10% of your rent. They do everything remotely, passively for any out-of-state investors, and you can finance. Yes, you can finance this low-cost rental properties, which is and not a lot of people can say that. So if you buy a single family home, residential investing strategy, the minimal down payment is 20% down payment, although you can put more if you want. Anything duplex or higher, duplex 2 unit to 4 units per Fannie Mae lending guideline, you have to put 25% down payment minimum on multi-units, 2 units to 4, which is fit under the Fannie Mae 10 property lending guideline per person. Okay, and these kind of properties are normally pre-leased, and if it's not pre-leased, very easy to rent. Over the history of this type of market, mainly in the Midwest type of markets, we're talking a tertiary type of market. Is not a cyclical real estate market. It's a very stable market, and it has done well over many years. For regardless of where you're located in the U.S. or even out of the country for that matter, you can still successfully invest from out of state and remotely and passively, as long as you have a great turnkey provider who's been in the business for the past 30 years that can help you scale your portfolio, multiple property you can purchase within few various price ranges. I know we talk about $50,000 property, which is shockingly amazing. You can still get financing, which is a very good value. You can buy, more than that. So a higher price than that. But at the end of the day, from a big picture, if you're a newbie investor or you're savvy, experienced real estate investor, mom and pop types, income property is an ideal investment. Rental property is history's most powerful and proven multi-dimensional real estate asset class, because it'll give you 5 ways to make money. Okay, it will give you income, which is your monthly or annual net cash flow, or passive income for that matter, over time. Depreciation, you're gonna get a lot of tax benefit. I'm not going to discuss that in detail. You can find it on my YouTube channel or my website. obviously equity growth, right? If you can get 3 to 5% very conservative annual appreciation, then over time your property and your asset will grow quite dramatically. Long-term buy and hold. So appreciation and then leverage. You use the power of leverage. If you have a good credit, then if you have good credit, then you can get financing 20 to 25% down payment. Even with if the interest rate is very high right now, at least 7% for owner-occupied buyers. But if you are investors, you have to pay a little bit more. That's how the lending guidelines will it dictates, because if you're buying a rental property, your interest rate is higher. So even with interest rate 7.5% 30-year fixed rate mortgage for investor, or even 7.75, you see what I mean? You can still cash flow. But the key is in the future, when and if the interest rate comes back down, you can always cash out refinance your property, and then you can restore the high cash flow that you expect to achieve. So another new terminology, some of you have heard of it, is you date the interest rate, but you marry the house. So the interest rate is always interchangeable. So for right now, since you are buying a income property asset that will give you multiple ways for you to make money, the cash flow is relatively low, but that's only the first year of projection, right? So we need to invest over time. Due to inflation, I have a new concept, is inflation-induced cash flow destruction. This means you're going to raise your rent in line with inflation. That's how it is. When inflation rises, you can raise your rent. That's cost of living. And then when you increase your rent, and then you can be able to cash out refinance to have a better interest rate, so you can lower your debt, lower your mortgage payment, so you can have more cash flow on a systematic basis, year over year, long term. Okay, and also depreciation and tax benefits. It could reduce your taxes, put more money in your pocket. I'm not a licensed tax advisor, but consult your advisor for that. And of course, leveraging the power of leverage. The tenant is gonna pay off all your monthly and annual debt service, everything, the whole 9 yards. So your tenant gonna make you rich, and everything else, and your property will appreciate over time. Yeah, it may go through some corrections like we're going through right now, but as long as you buy the 7 to 10 years buy and hold strategy as a real estate investor, then you could be fine. Okay, so that's pretty much the conclusion. Yep, the takeaway is yes, income property, whether single family home, residential investing, or duplex or triplex or fourplex, is a multi-dimensional multi-dimension real estate asset class, the world's greatest wealth building vehicle. There's no other assets that can give you all these multi benefits, which I just alluded to. So who would have thought you can buy a $50,000 property somewhere in the US and still get all those great value add? So as long as you buy in the right market, obviously you're not going to buy in California or high price markets. So you find a location, do your research, find an affordable market where the rent that you can collect match the price that you're buying, and the numbers make sense. Then that's how you do it. Okay, so that's all I have to say. I will come back on a weekly basis to talk about more investment opportunities similar to this, and stay tuned. And if you see a lot of value on this presentation, please smash the like button and also subscribe to my YouTube channel so you can continue to get a lot of great real-time information about all aspects of real estate, especially real estate investing. So any one of you out there, they're all motivated, they're all very focused, they have discipline. Regardless of your background, you have the opportunity to scale and buy multiple real estate properties over time, long term. But okay, so yep, it's very, very possible. Thank you so much. for watching and listening. I will see you on the next video very shortly. This is Siwen Yi. Have a nice day. Bye bye.